All right, folks, welcome back. So today we had Fed Chairman speaking at 2 o'clock in the afternoon. You can see that here. Now I'm going to kind of work backwards today. And I'm going to talk about the 1 minute chart, work our way back out to the higher time frame. So it's kind of like a bottom-up analysis. So ahead of the 2 o'clock in the afternoon Fed Chairman jawboning session, we've seen this little Judas swing here, and notice that it just fell short of the morning high, and the high comes here at 12,535 and a half, and over here in the morning session, $12,535 and 3/4. So it fell 1/4 of a point, or 1 tick, short of that high. So it runs up after clearing relative equal highs, then breaks lower, no model short in here. Then the market drops once more below relative equal lows. Now, what are these lows here? These are the lows in lunch hour, New York lunch. Okay, here's noon to 1. And I taught you in the mentorship that many times when there's an afternoon continuation to the upside, you'll see that the lows at lunchtime will get swept. And we're seeing that here. Now, it dug down deeper into an area, which I did a recording for Twitter today, and my chart didn't have this. I thought I had it because I was looking at another monitor, but this is the imbalance that I was looking at that unfortunately doesn't appear in there, but it's there obviously, and it's below the relative equal lows, and the market drops down below that, and then all of this right here was manipulation, and there was lots of manipulation. Initially, the market rallies up. So it starts off like it's going to go up to that level we were looking for and falls short of it and breaks down. So what's actually happening is buy stops are being triggered. So anyone that wants to go long on like bull flag patterns and things like that, or breakout traders, they're buying and then they're getting taken against their long with drawdown until they're either stopped out, or if they don't have stop loss, they get squeezed out so they can't take it anymore. They just bail out. Below the relative equal lows, any long holders from the morning, they have trailed their stop loss below here. So they take them out. Why? Because they don't want them being able to profit to the real move. What was the real move? I hinted at 12,553 and a quarter. That was a draw on liquidity. So we took out the New York lunch lows here. And what I was suggesting here is shorts are about to be squeezed as it rips higher into 12,500. Oh, that should be 553. Sorry, that's a misprint there. You all know what that is because it's right here. But I was being facetious while I was recording because as I was watching it run up. Then it broke down. I was like, okay, they're going to take the liquidity out below here and dig into this imbalance, pick up some more orders. I got one off as far as a long at a really poor entry, but I was really focused on just being below these relative equal lows. That was fine. And then all of a sudden it starts running up. And then in here, we have order block. It trades into that multiple times. It rallies up. Fair value gap, I outlined that. It didn't get into it, but I was allowing for that type of movement. And then at 3 o'clock, the algorithms will start to spool price in the direction for the liquidity, which was that 12,553 and a quarter level, which it hammers there. Let's go and take some of this off. We don't need to see this anymore. We don't need to see that anymore. We don't need this. And don't need that. Okay, and I'm going to take you to a 5-minute chart. Okay, now it doesn't look so obvious in here as to what may be available, but we just bumped below that high early on in the morning, then broke down, and all the liquidity resting above here was treating the retail market like, hey, you can trust us. This is resistance. It's not going to go up there. And then when it starts to sell off like this, notice that my model did not give a setup this morning. Or not this morning, but this afternoon. It didn't give this setup in here. Even though it did run buy side, it did sell off. It did not give a setup. Notice that? It's important to notice that. So some of you are fearful. What happens if I take a trade and it's wrong? Hopefully you see that. Now, it's not like this all the time, but you'll find that when the market's really in sync, these algorithmic principles will not appear in markets that are not likely to deliver as I'm showing you. So it's not a panacea. It means it's not going to work all the time. But hopefully you can see that there are times when the market does sell off, but it doesn't give us a setup. But then it creates the real move the other direction, where you can find my setups and the formations of the fair value gap and such. So obviously you can see that the market did in fact trade down into the imbalance on that 1 minute chart, and it rallies from there into the 12,553 level. We'll take that level off now. And I want to go out to a 15-minute time frame. Don't want to spend too much time here. We have an imbalance in here. It trades down into that as well on the 15-minute time frame. Optimal trade entry here, and rallies up for the buy side liquidity. Again, aiming for that 12,553 and a quarter. And we'll look at a 60-minute chart. Okay, and the market trades back down into all of this here and rallies up. And this was that area I was telling you about a week or so ago, that this is what we're looking for. I mentioned that on my community tab on my YouTube channel. And we have now just pressed up into that area. So let's go over here and do this. And I think we'll use this one as the higher one. You can see we did in fact clear level. That's where that 12,553 level and a quarter rather came from. I'm not suggesting that we're making a high here to go lower. The next area on the upside, it's really sloppy over here. I would look for this one here next. What is that high? 12,624 even. And if we start to really run, we could revisit this area here. But I'm not going so far as to say that for right now. But just look for this one here. That's a nice one to look for in the next upside right there. I think that's a fair one to anticipate and study. And I think that is going to be it. No, I'm going to show you one more time frame, the daily chart. Why can't I get that to pop up? There we go. Relative equal highs in here. We ran up into that. So that's that whole business based on that daily chart, as I was talking about in, I don't know what episode it was recently in the mentorship on YouTube. So hopefully you guys can see that that is, in fact, what we were working with for daily bias. Yes, the market did, in fact, create, a big run lower, and then create another run lower here. But that wasn't my setup. I was drawing everyone's attention up to that 12,553 level, and this was the run that I liked. And this is the one that was the hunt. Okay, and there's that little one here and there. So anyway, not a whole lot of money through that paper trade. It was like a little over $5,000 in terms of hypothetical profit. But hey, it worked. You guys can see the effects of it. And it's a little bit of an advanced idea, but I did teach about the general factors that go behind PM or afternoon session trading. If you're bullish and it consolidates in lunch, find the lunch lows, wait for it to run that out, and then they'll resume. And it's right out of the teachings in this mentorship on this YouTube channel.